Welcome, everyone. My guest today is Lead Analyst Logan Mohtashami to talk about remarks by Fed Chair Jerome Powell on mortgage rates and housing inventory. Before we dive in, I want to thank our sponsor, Trust and Will, for making this episode possible. Logan, welcome back to the podcast.
It is wonderful to be here. I woke up and looked at the White House tweeted my article about housing demand at a 3-year high, and because mortgage rates fell, and it made me ponder the thought that Jerome Powell, the head of the Federal Reserve, the esteemed Jerome Powell, went on TV when they asked about housing, and he said they have no tools to help the housing shortage.
When was this?
This is at the Fed press meeting. Yeah.
Okay.
And I said to myself, and I don't agree with the housing shortage. We could get into that a little bit later, but just remember, the institution that really manages mortgage rates, when rates went up, demand fell, housing permits fell. I encourage everyone to go look at housing permits and housing starts. It has been going down since the rate hike cycle started. There was a brief time where mortgage rates fell on their own, late 2022, early 23. The Fed was still hiking rates during that period of time. And during that time, I just want to remind everyone, Neil Kashkari of the Federal Reserve came out on national TV and said, we don't want this. We don't want more housing back to life. How are we supposed to balance an economy? Mortgage rates getting down to near 6%. Why? Demand goes up. So what happened late 22, early 23? Mortgage rates went down to 5.99%, the lowest mortgage rate print that we had post 2022. And housing permits, single family permits started to rise. And they started to establish the building of new homes. So the institution that really controls 65 to 75% of where mortgage rates can go made a public statement that they have no tools. And we sit here, we don't have any of the housing starts data for a while now, but the last print in August, permits are at recessionary lows. This is what we're dealing with.
So what do you make of that? When he says that, what do you think he means by that?
I've always believed this about the Federal Reserve. They are not true housing people. They're also what I would consider third-party regurgitators. They take information from housing institutions and look at the data, but if you are the head of the Federal Reserve, and there was a time where somebody wrote about, well, if monetary policy is too restrictive for too long, it affects the future production of supply. He does this all the time. So it didn't make sense to a lot of people, and people are coming to me asking. I said, this is just how he answers stuff. If mortgage rates were down at 5% and new home sales grows again, builders are moving down their total complete units of supply, single family permits will grow, housing starts could grow, right? So unfortunately, we're always stuck with this same comment that he always brings out about this, but it's just not true. And again, they do not make policy around the existing home sales market or the new home sales market, but their tools affect the housing sector more than everyone else. So it's not a good look when he goes on national TV and says something like that, when clearly back in late 22, early 2023, rates came down low enough to show a little bit of life that one of the Fed presidents had to go on national TV and say, how we're supposed to balance an economy. Why? Because it goes back to what I've always said. If people start having sex, they start buying homes, they buy more stuff. And if you're trying to balance an economy, housing activity has a multiplier impact that they're just afraid of, right? It's better for him to say that than to say, we have no tools to help the production of housing, when clearly, and we go back to what we wrote in June of 2021, when we said, hey, guys, I'm just going to tell you, there's going to be no construction boom. As soon as rates go up from here, housing demand will fall, new home sales will fall, the builders will, permits will go that. And here it is, voila. Another by the end of 2025, reality of how the housing economic cycle really works from real analysts and not third-party regurgitators.
Well, I guess we will see if the Federal Reserve can do more to do that when we get a new Fed chair. Of course, you feel like even when they announce a new Fed chair, there's an effect there of that person.
You know, it is. They're starting to become more of a discussion that the market really doesn't like Hassett, and the 2-year yield is going lower, but the 10-year yield is drifting higher, and it's a very short-term, trade that's going the opposite way. I would just say, listen, the 10-year yield has been in range really for 3-4 months now down here. The 2-year yield going lower, 3 months going lower. They're anticipating more rate cuts than what the Fed is talked about. Again, if we're supposed to be a neutral policy, we have maybe 2 rate cuts left. Beth Hammack, our favorite Cleveland Fed president, who 7 weeks ago said the labor market was robust, and then Jerome Powell says it looks like the data was negative. She came out today and said, I wish policy was a little bit more restrictive. So
Whoa, really?
Oh yeah. We love Beth. Beth is she says it as it is. There needs to be more pain. There's not enough pain for her so she stuck to her guns on that one. But it goes into another discussion about housing shortages and inventory and how does it really work, and do we really have a shortage anymore? And we always talk about building more homes. We never really do because I think the housing discussion has to always go with the supply and demand equilibrium on how things have operated for decades. And people just want to talk about supply without the demand effect.
Well, let's talk about the inventory, because you feel like Jerome Powell is wrong on inventory. You even, when people ask you about, the fact that the home builders, that we're low on inventory, or the home builders should have built more, you would even say no to that.
I know I'm on an island on this, and I've always been on an island. I will die on this island, and I will challenge any person on planet Earth to debate me on this. But I do not believe the builders underbuilt in the last decade. For those that don't know me, in the last decade, when I first started writing about housing economics, I said kind of like from 2008 to 2019 will be the weakest housing recovery ever. And that, now that I look back at it, I could see what other people were thinking. Housing was a lot more affordable back then, and there was a lot of inventory. So in their minds, their models actually told them that home sales would be much higher and housing starts would be. I was like, no, homie. I don't usually like to do long-term tail calls, but I said, we are not going to get 1.5 million housing starts until years 2020 to 2024. That was looked at as a ludicrous statement, but I said, no, it's never going to happen, because the builders are going to have their weakest new home sales cycle because they have a more expensive product. There's a lot more cheaper homes out there. The credit markets and demographics weren't really that great in the last decade. So here we are. We never got to 1.5 million housing starts until years 2020 to 2024. Another call, purchase application, the mortgage MBA will never hit 300 until years 2020 to 2020. Hit 300 like the second week of January 2020. The builders only build on their demand curve. They could care less of what everyone else thinks. They sell homes as a commodity. So what happened in the last decade is that not only was it the weakest new home sales recovery ever in history, it was the weakest housing starts and permits ever in history, because the builders kept on missing sales estimate 2013, 2014, 2015, 2018. And they just don't sit there and just build, and then pile up on inventory. They're completed units of sale. And I love the fact that I'm able to show people these multi-decade trends. But when the total completed units of sales get to about 120,000, they don't push, right? And we have 5 to 6 decades of this information sitting there for people to read, and they choose to simply ignore it always and always. And that's why we wrote that article in 2021. We said, oh, you people are so cute. You're like little cute kids. You think there's going to be a construction boom. As soon as rates go up, because the builders were really pushing pricing on everyone, their profit margins, juicy, fat profit margins they had, as soon as that happens, and here we are, December 2025, the last housing permit start we got, COVID-19 recession levels, housing starts, COVID-19 recession levels. That's why we wrote that article almost 1 year ago today, that the builders have a supply and demand problem. So don't look for any kind of rebound in here. The only way we've ever seen them get a little bit more proactive is Jerome Powell, if you're listening, drums up, mortgage rates get down to 6% and stay there for a little bit. And oh my God, it's a remarkable. The builders' confidence are up. Small builders too. The estimated sales growth are rising. Traffic picks up. So there are tools that have made this work all the way back to the Peloponnesian War, Sarah.
But all the way back.
Yeah.
So I think the point that I want to dig in here is it's not just that you think that the builders missed it. They shouldn't. You think the builders were correct because you're like, they sell to demand, and the demand unless affordability, which includes mortgage rates, gets to a certain level, they're not wrong for what they're doing either. There's not a demand for new homes at that point.
This is the private sector, Sarah Wheeler. People demand results. Shareholders, are you kidding me? Do you think this is like the government where you could take unlimited losses all the time and actually it doesn't matter? No. How you build your business is if you can make money. If you cannot make money, you do not have a business, right? And this is why, I think it was a New York Times writer, I think it was back in 2021 or 2022, when rates, actually I think it was 2022, when rates went up, and he's like, oh my God, the builders aren't building homes. They need to build homes now, even if there's no demand for them. I go, you have never ran a business in your life, right? And that's the problem. In your world, money is free, it's abundance and all this stuff. And this is I disagree with the YIMBY, yes in my backyard people. Unless you could get financing, unless you could get demand, the supply and demand equilibrium for economics and housing has been very efficient. And we are at levels to where the builders are like, So all this talk about a major construction boom and all this and no. It's better now that mortgage rates are now at 6%, but imagine if we were at 7.5% mortgage rates and Jerome Powell came on TV and said, we don't have the tools to help build homes. This is what I got to deal with. It's bad enough that the YouTube people are trash always. And God, we heard a bunch of new grifting ones this week, but for the president, the Fed chairman to go out on national TV and say that, and it just sounds weird. Like you really control kind of mortgage rates, and 65 to 75% is Fed policy. And I say this because Neil Kashkari recently came out, I think it was a year ago. He said, if we really wanted mortgage rates lower, we can do it. We just cut interest rates, we can do it. And he's right, 65 to 75% is. I just don't want to do it. So at least make it a something coherent statement so people could kind of look at you and go, I'm not sure that's right. Because I don't agree with Powell's statement now that there's a housing shortage, right? I have set numbers that I put for myself. And once we got them, I said, I'm out. I can't talk about it anymore, right? On the national side, and look at the builders, right? If there was a housing shortage, builders would be booming with demand and all that stuff. And always remember, if you're talking about supply, if you do not have the demand equilibrium in there, you're working with an outdated dinosaur model that doesn't exist. And you're going to sound like that New York Times reporter who's never ran a business in his life and goes, the builders should just keep on building and just do that. That never works out.
That never works out. So the one time, the period of time when you were like, yes, we actually have too low inventory was 2022, right? We had 240,000 units for sale across the entire United States.
So I have a rule of thumb with my inventory. If we are above 1.52 million on the national data and monthly supplies over 4 months, so that's the NAR data, not ours, we have enough active inventory to keep days on markets going. And then, housing is a functioning marketplace. What happened during COVID was housing broke out before COVID even hit us, right? And your prices were already accelerating higher, faster. Housing starts broke out, new home sales broke out, and then COVID happened. And then the worst thing ever, we had no seasonal increase in inventory in 2020. So we are already broken to all-time lows, and then we just went straight down. I'm like, oh God, this is a problem, right? And it's funny because I sit here thinking about all the people, the most educated, Harvard and MIT and Wall Street and NASA, all these housing doomers in 2020 and 20, we were talking about big national nominal home price rises. Clearly, Harvard missed out on these intellects. We had active inventory near at all-time lows. We had 3% mortgage rates, and we had a rising demand curve, and that was the backdrop for the biggest home price crash post-World War II. Not the most educated people. Entertainers, but not the most educated. So, of course, we're like, oh my, we need higher rates, everyone. This is not a good thing, right? This is what an inventory shortage looks like. Now, on a national side, does anybody really saying there's a major inventory shortage? Demand is booming, right? There's multiple bids everywhere out there, right? So for now, monthly supply over 4 months, right? It's 4.5 months. The housing bubble crash years, I think, was running at, over 10, but it's a functioning marketplace. That was the whole concept of team higher rates, because unlike Jerome Powell, I know the consequences of this, right? But for the first time in my life, it looked like a shortage, and now we're back here. So not only do I disagree with him on they can't do anything about it. It's the whole the inventory shortage thing is just not there anymore, right? We're not seeing these, oh my God, there's not enough homes out there in the market. The demand right now, because housing affordability got really bad, the product now that's out there is much different than the product that we saw in the previous decade when it was more affordable and inventory is higher. So you have to put all these tangible variables in there. I don't think he has the ability to do it. I don't think a lot of people take the time to kind of look at the whole enchilada of housing economics there. So, of course, our data is a little bit different than everyone else because we just show the raw single family homes available for sale, not in contracts. So it got really bad, right? I mean, February of 2022, I just threw up the flag and said, I don't care. This thing has to absolutely destroy. We need higher rates because we would have had another 18 to 19% home price growth year. And all that does is kill future demand. And prices were rising actually 17 and 18% until the data filtered itself out. But we only had 240,000 single family homes available for sale in March of 2022. We had too many people chasing too few homes. We had the unhealthy housing market in 2020, to the very unhealthy housing market in 2020, to the savagely unhealthy housing market. But now we're good. Choices, buyers and sellers, good.
When you look at the national data, and then the problem is you've got these two giant states, Florida and Texas, that really influence that national data in a way that, if you're not in Florida and Texas, you can feel like that's not my reality, right? Because when we had all that migration coming in, we were low on inventory. Now that slowed down, there's more inventory in Texas and Florida. How do you account for that when you think about those national numbers?
I disagree with that assessment because every state pretty much has inventory growth now. There are some states that are not back to 2019 levels, of course, but we don't see these there's no homes to buy stories anymore, right? Because the monthly supply, and this is why monthly supply is this is why days on market is very good. We were a days on market people, right?
Yep.
I mean, that's just the days on market when it's a teenager level is never a good thing, right? There's no good news you have in the housing market when the days on market are a teenager level. So the days on market are so sporadic by everyone that it confuses everyone out there because some people have like 45 to 90 days or something. The NAR's days on market normal would be 30 to 45 days, right? That would be normal. We had like 14 days in 2022. That is never a good thing. There were homes in Montana that were going out for hours. They're not even waiting for the days, so more supply, less price growth, more choices. All inventory is up everywhere. I know Connecticut and New Jersey and Illinois there, but in general, we're in a much better stance. So on a national basis, monthly supplies over 4 months, inventory is above 1.52 million. We're going to get the NAR's seasonal decline in inventory. So it's on the lower end of but as long as I have 1.52 to 1.93 in over 4 months of supply, I do not want to get into this low inventory. There's not enough homes. Demand is booming, whatever. Demand was never really booming in during COVID like it was during the housing bubble years, which was a great conversation. During the housing bubble years, inventory was rising, right? Some poor unfortunate guy put me on his podcast and he kept on telling me that whenever inventory rises, prices fall. He goes, you've never read a book and you've never studied housing economics because inventory used to rise in the 80s, 90s, and 2000. No, it didn't. Yes, it did. You have never looked at a chart either. Person never talked to me ever again after that because once he looked at it, once he decided not to burn books, but read them, There he goes, looks at it. He's like, oh my God, it is right. Yeah. Total active inventory was rising from 2000 to 2005, 2 million to 2.5 million. Monthly supply was below 5 months. Rising demand curve, much different marketplace. Sales were booming back then. Now it's completely opposite. Why do we do those crayon charts or those economics? What's going on here, right? Qualified mortgage changed everything. So authentically, we had a shortage that is very bad. It's very unhealthy. It's undeserved price growth. It happened, but we're back here. And I can't, with a straight face, do what Jerome Powell did. We have no ability to help the production of housing. There's still a shortage of homes, right? So it goes back to decades and decades of information. Active inventory, usually 2 to 2.5 million. We can do this with 1.52 to 1.93. Monthly supply over 4 months is fine. But the builders, oh, homie, you get to 120,000 completed units, and that's why we wrote that article a year ago. No, it's not going to work. And here we are. Whatever the next housing starts and new home sales prints, if rates had stayed elevated, the thing gets worse. So that's how adults work in the private sector, right? They're not some, unicorn, Care Bear, strawberry shortcake, la, 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 let's all have a picnic and build homes and, out here. Come on.
You might as well throw Cabbage Patch Kids in there if you're going down
that
list.
We used to, oh my God, when I used to score my touchdowns back in the 80s, I used to do the Cabbage Patch. Oh, bringing back the old memories out there. Oh yeah.
So. Not that Cabbage Patch.
I know, but I thought of Cabbage Patch, the dance I used to do when I used to score the touchdowns. Bringing that back.
I thought you were a basketball player. What are you talking about touchdowns?
Sarah, I think you're talking about Garbage Pail Kids.
No, I'm talking about Cabbage Patch. Maybe that was before your time.
No. I'm a mid-Gen X, but no. When I think of Cabbage Patch, I think of the dance. No, I was actually a better football player than I was basketball. Oddly enough, I stopped growing, at like 7th, 8th grade. So I figured I'm not going to be a center at 5'10", so I got to learn to be a point guard. But I loved football, man. That's why I always tell people, like, if you really want to know the essence of me, think of me as a strong safety that sees an overrated, trash-talking tight end that's going to come down the middle. I know is going to soft. Every single day I woke up and I go, bleep the Doomers. And that's me knocking him on his bleep, And so everybody could see, and, he ain't talking anymore out there. So that's just kind of the mindset I have out there. But yeah, I played basketball. I coached high school basketball, but in my heart, I'm a strong safety, baby.
In your heart. Well, thank you for joining us, going over all of this. We'll talk to you again soon.
Pleasure.